So in this new year, what should we be looking at when it comes to altcoins, as altcoins have been destroyed for approximately 20 months already? That's what we're going to discuss in this update, but before we're going to continue, make sure to hit the like button, subscribe to this YouTube channel as we've just started into a new year. Also make sure to check out our free trade letter and check out our premium membership, which you can find in the description beneath. Also check out my other socials, which are Instagram and Twitter. Now, when we're looking at the altcoins, I think the entire interest into crypto has diminished away because most of the retail traders are into altcoins. And as they have been falling by approximately 90 to 99% in the past 1.5 years, I think the interest into crypto has vanished away because altcoins are simply not doing it. I think the only market that is having interest right now is the case of NFTs. And those are luxury products, but those are still flip-flopping around. So you see that the NFT markets or the NFT community is relatively large. Other markets, the altcoin markets in general, are not seeing too much, as most of the altcoins are dropping quite substantially. So in this update, we're going to look at a few altcoins that I'm personally watching. Probably a few you have been knowing already, but we're going to look at them to see what we're standing on right now and what the outlook can be and what my theory is on altcoins in general. So when we're looking at the altcoins, the first one I'll be looking at is Chainlink, which, as you can see, is currently crashing down significantly. So we have been seeing this bull run in 2021. We have been seeing a dead cat bounce, which was technically the new high for Bitcoin, but this was actually just a dead cat bounce for most of the markets into DeFi. Lower highs, lower highs, lower highs. So those are now resistance points if we have a turnaround. So for now, if you look at Chainlink, the first real resistance is the area around $7.80. If that breaks, you can see continuation taking place towards $16.85. But what are we looking at in terms of cycles? And what are we looking at in terms of levels of support? Well, if we look at support levels, we are getting towards the high of 2019, and we are looking at a level which we call break of structure. But this was the actual pivot where the entire bull cycle started to take place, which is in June 2020. So right now we are going sideways for 8 months already, and we're currently facing this level at $5.10 right now, which is a level that I'm personally watching if you want to accumulate. Yes, Chainlink is still trending down, but Chainlink can't be missed when it comes to the portfolios. If you are into DeFi and into oracles, I think it's one of the essential cryptos you should be having. So in that way, it's accumulation period right now happening all across markets, and that's also what you see reflected into your society or mainstream media. No interest, only negative. Stuff like FTX has been happening. Gemini is still taking place at this point. Nobody is speaking about crypto anymore because everything is crashing, the economy is bad. That probably will sustain for some time. So we're probably going to see a case where things like Chainlink are going to bottom out around $4.50 to $5. It's really close, I believe. And then we get a relief rally somewhere in 2023 taking place towards here. And then probably people are going to be bullish again. Maybe we even go a bit higher. Then have another smackdown just like we have been seeing in 2019 before we start taking off in 2024, 2025. Why am I saying this? Is that I believe that we are probably in for a fake relief rally. And that fake relief rally is correlated to the fact that in the next quarter, the Fed is probably going to pause the rate hikes because inflation stops going down, or inflation keeps on going down more than expected. Unemployment starts to rally up. Economic data is going to be worse. And that's all over the world. So I think that based on that fact, we get a fake relief rally because people think they have to do QE and that that the economy is going to be getting out of the tough position that they are in. In that case, buying Chainlink in these regions are quite clear. Your invalidation is quite simple. You're looking at a case that if we lose this level, you're probably going towards $2 to $3, which essentially I don't believe that that's going to be that far. But if we lose like 350, your invalidation is quite clear, which is approximately like 30 to 40%. But on the upside, we can have a 3 to 4x, which is approximately a risk reward of 10, which makes it valuable to start accumulating the position despite the entire sentiment that we're having, despite the macroeconomics that we're facing at this point. So I think that accumulation at this point for this one, for 2023, is not a bad case to look at, because simply it has been going down so fast, and DeFi is one of the biggest killers going to be taking place in the next run of the markets. So I think that it's not a bad one. Another one that's currently getting crashed a lot is Polkadot. That has probably got a lot of things to do with Gemini at this case, as Gemini is one of the largest holders, and Polkadot is currently into one of those positions, so it's getting stretched on the price action irrationally. So I think that if we are into for a relief rally, then one of those assets to add to the portfolio is definitely going to be Polkadot, given the fact that Polkadot is going to be pretty much bring a rally towards the levels that we have here between $16 to $24, which is the same concept as we go with Chainlink, the same idea, and that's why I think that it's not a bad idea to start accumulating those, but do it with only a small portion of your portfolio. Also, another one that I'll be looking at is Atom. Had seen a quite small rally already. If we look at this from a TA perspective, we can see that we have had this retest at the high taking place. We've had a run to the highs, and now we're consolidating again. I think that once it cracks the high again, we're going to have some sort of runner taking place towards this block as a relief rally, just like we have been seeing in 2019 and 2020. I'm not sure whether we're going to get the lows here, but I think that accumulating this position is not a bad case to do so, especially since we are probably going to get here. And I think the easiest way to go forward with is to have assets that are the tier 1 assets, so platforms. Also another one that I would be suggesting at this point, it's a tricky one, as the chart itself is shouting for a deeper cliff. That's what you see on social media, that Binance Coin is ready to crash even more from here. However, if I look at it, we are into a support level at 233, which makes me believe that if Bitcoin is not going to fall too much at this point, it's not a bad case to have the biggest exchange in your portfolio, given the simple case that it's going to be a bigger winner even when the markets are going to turn around. We're looking at another one, a small final asset at this point, Scale, which is currently going beneath the listing price, as we can see on Binance. Currently still trending down, but this is one of those assets that if it starts to turn around, and it's still being fundamentally growing at this point, if it starts to turn around, we're going to see continuation. So if it starts to break 0.25% cent, it's going to take out all these highs and start rallying quite fast towards here, which is essentially, if you allocate it in a small portfolio, it could be an 8 to 12x during this year. I'll be updating this video during the next months, probably going to do it on a monthly basis. The levels are in the video, so you can see it already. I hope you have enjoyed this first one. Tomorrow I'll be back with a fresh new update. Make sure to subscribe to this YouTube channel. Make sure to like the YouTube update. Ciao.